President Blue Line Futures is helping us take a look at the number here. Bill, I know it just kind of came across the wire here, and we're actually still waiting for a couple components associated with this to hit. But talk to us about what you're seeing here as retail sales. At least we have the core retail sales number month over month here, a little bit higher than expected. They were looking for a decline of 0.1. We got an increase of the same 0.1%.
Yeah, it looks like the headline, it looks flat. I might be seeing that right now. It looked like it came across in a delay. Yeah, I mean, it's. I think yesterday was the big swings, but better data is likely going to maybe weigh on the tape a little bit here this morning. Earnings, from what I saw, were decent to start, but it looks like Morgan Stanley missed, and they've backed off they're down about 2 to 3%. That was a big run, big reversal yesterday. 3,700. We even going into the number yesterday in my morning note to clients, talked about we have major 3-star resistance at 3647 to 53, which held the early week rally. But we put a note in that note was saying that 3690 to 3700. That's the level that we really need to get above decisively, and then could really start to maybe force some short covering. So we're right up there right now. Yesterday was great to see, but we really need to see this strength on a weekly closing basis. I'm certainly excited and put what I manage in a place to be able to try and jump on this rally. Trying to get cash to work. We had been protecting downside, so this is what we want to see here, and it just depends if we can get a little more momentum here on the day.
Yeah, I think it's important at this point whether we see some initiative type buying or whether this is just responsive buying in terms of that dip that we saw as shorts covering, possibly some new short-term longs getting in. But we really want to see some longer-term initiative buying here before we're going to see the ability to take out any key levels that were established on the way down. To your point, each one of these rallies that we've seen recently has been short-lived and limited in terms of follow-through. Bill, let's talk a little bit about how it seems like having seen the inflation data headed into this morning, retail sales maybe not the primary focal point, right? I mean, earnings is really where things stand with the banks today, and then as we head kind of into the real thick of it next week, starting off Monday, Tuesday, Wednesday.
Yeah. I mean, earnings are really going to be the focus. I tend to think that we're going to see a little bit of a pleasant surprise. I mean, the analysts somehow set this bar just a tad. Tad soft typically, and you see the executives, the CEOs really lower their bar as well. I mean, they've gotten out ahead of things and talk pretty negative. So I mean, people broadly, sentiment's negative on earnings, negative in the market in general. I tend to think that we could see a bit of a surprise and help underpin some strength here in the market. And yesterday's inflation data, I do want to say this. It was hot, but I don't think it was red hot. And I don't think it was really this super hot number. Now, analysts, it was definitely hotter than what analysts had expected. But the Cleveland Fed nowcast was more or less in line with the expectations. So I think when we had this massive sort of algo-driven liquidation and selling in the market that took place, we went right down to 3,500. And that 3,500 is the 50% retracement, the whole pandemic move. So I mean, it was a really good reversal, and it's just we hope we get a little bit more upside here, and that could trigger some short covering for a really significant rally. That's sort of an inflection point here today and on the weekly close.
So let's talk energies, because it wasn't just the indices this week attracting attention. Crude, 93 to 85, I think it was, obviously hanging out around this level, adding to some of those inflation concerns, stubbornly elevated levels that we saw, again, a reflection of this week in terms of the data, but also prices at the pump, I mean, we've seen, and obviously, again, when you're talking about the influence OPEC's had, I mean, we heard from the IEA, the EIA kind of painting this sort of grim picture right now in terms of world recession. You've got quite the tug of war going on here, but crude remaining and holding up around 90 throughout it.
Yeah, it's holding really well. And, we've been extremely bullish crude oil going back to the summer of 2020. And it's something it's been really the gift that keeps on giving, whether it's what we're doing in the future side or how we're positioned in wealth and portfolio security side with portfolios. And it's definitely been a good run. Now, there's been times more recently that have taken a neutral approach. Back in August, I think it was, when we broke below 93, calling for, this cleansing down to 75, and it wasn't a really sharp cleansing, but it was enough to sort of recalibrate the market. Now we've rallied back, and it is these lower peaks that keep taking place, and so this lower peak that took place through the end of last week has definitely got our attention, and we're quick to go neutral right now as the midterm elections loom. I think there's a lot of excitement that came out of OPEC last week for the market, and really everybody who wants to buy has bought. But the reality is like you heard from OPEC monthly report, you heard from the EIA short-term energy outlook that the 2023 demand outlook has been put down a bit, and that's why OPEC's taking production off, lowering their production ceiling and whatnot. So, but it's only they're taking about 900,000 barrels per day off, given the fact that a lot of these countries, their spare capacity is just maxed out at this point. So I do think that there's going to be a time to buy this market again, but it feels like the White House is going to be throwing the kitchen sink to keep prices suppressed in the near term. And I think what they're going to do to try and keep prices suppressed would be really is going to open the door for a massive buying opportunity. It's actually going to have bullish effect in the months to come. So I'm excited for the opportunity, and I'm welcoming lower prices to take advantage of it.
It does seem like the White House kind of walking a very fine line recently, for example, with Russia trying to implement these price caps, but yet trying to keep flows going throughout it. So it doesn't seem like Putin's going to necessarily go for that. Taking a quick look here at crude oil in terms of where things stand relative to the 50-day moving average, you can see they're right on it as we speak, as we head into the end of the week here. And I wanted to talk a little bit about gold, Bill, and what you've been watching there at 1660 right now, down around 1%, but well off the lows that we saw just a week or so ago, around the 1620 level. We've been talking about how this is mostly a dollar story, but it does seem like with this Russia rhetoric ramping up, ultimately that geopolitics will be a factor as well.
It is a dollar story, and you've heard me come on before. I'm actually pulling it up right now, the Chinese yuan story as well, and that's something that where gold and metals in general are really going to be impacted by the price of the yuan. And the yuan today, it's back above 720 today. The dollars against the yuan here. It's been, the dollar keeps strengthening. It's strengthening against really all currencies. I've played the metals for both sides here in the recent couple months. But I think I have to believe there's some value, in the 1650 area. I'm on the camp that the U.S. dollar is more or less looking to top rather than extend the rally. I think the makings we had at the end of September were the makings of a blow off top in the U.S. dollar, and then we get sort of inflation that is been just steadfastly higher. It's helped underpin the rebound in the dollar. But we look at inflation expectations going to October right now, which is something that's a little bit different. I've been drawing the parallels in the equity market to where we have the rally. That was actually a hot number too, and we rallied off of that. The only difference then that is now is when we had the July expectations that would be released in August. Through July, those expectations were actually pretty muted on inflation, and it was a pretty flat number. Now, the October inflation expectations, we're looking at headline inflation right now. The Cleveland Nowcast has that at an increase of 8/10 month over month. So, I guess on the bright side, it's being priced into the market right now. It's being discounted here, but that's a reason to keep the dollar strength going a bit, and that's something that again I'm looking for a blow off top of the dollar. I thought we may be getting it at the end of September, but we've gotten this rebound again, and it's not just U.S. data, U.S. inflation. It's the deterioration of confidence around the world. And look at today, you see the chancellor dismissed from the UK, and the pound is. At the start of this interview, the pound is down more than a penny. So there's a lot going on out there that's underpinning the dollar rally. It's going to keep gold under wraps until then. But on another positive side for the metals is you have the treasuries, and we may be getting a little bit blow off in yields right now, at least the longer end. We got the 30-year rally up more than a point as the start of this interview. I don't know how it's reacted to the retail sales, but there's a number of narratives for the metals, and I think you've seen shorts of really there was a managed money net short position, the largest in years, in both gold and silver. Some of that's been reduced. I'm curious to see. This week's or today's, I guess it'll be out Monday, is only going to be through Tuesday. So we start seeing some of how some of the recent selling would be incurred into the commitment of traders. But I'm curious to see that part. I think there's value here in the intermediate term metals, but obviously it's a fluid situation. There's a lot of drivers here.
Bill, we're looking at some of the weakness we've seen in terms of gold, down 1% as we head into the cash open this morning at 1660. If we could just pull this chart real quick, the 50-day moving average is up above around that 1720, 17, looks like 23 level, so we're below that right now. We'll keep an eye on gold in terms of the yuan and some of the other factors here, the dollar definitely being one of them. And appreciate you joining us here, Bill, to take a look at the retail sales numbers, help us break it down. And, well, a busy week that was for commodities. Bill Baruch, you can check him out at Blue Line Futures. We're going to